Hello, you are listening to Trump Republic Radio. It is August 16th, 2017. I'm your host, Enzo Quesada, and as always, I'm joined by my co-host, Bobby Hester.
Hello, everyone.
This week on the Midweek mini podcast, we're going over tax reform since that's what Congress says that they're going to work on when they get back from recess. That's what Trump's pushing right now. We're going to go into Trump's proposed tax reform plan, why we support it, common myths around tax reform, and anything else that we can really get into. But with that said, let's get into the proposal that Trump has put forward. Bobby, you want to give us the lowdown?
All right, I'm giving the lowdown. So, what we're going off of right now is the tax plan that the White House released back at the end of April. This was the official one that they released that they want to see. This is what everyone expects to be at least the starting point. We all seriously doubt that it will be the thing that gets passed when this is all done. But this is definitely where it will start, and we'll see where it goes from there. So, on Trump's tax plan, one of the things that he wants to do is take the current 7 tax brackets that we have for individual income taxes and cut that down to 3. And the 3 would be for individuals making, for single individuals that are filing by themselves. $0 to $37,500 is the first tax rate. The second level would be $37,500 to $112,500, and the third level would be $112,500 plus. Now that's for individuals. Now for people that are filing jointly, it's $0 to $75,000 is the first bracket. The second bracket is $75,000 to $225,000, and the third bracket is over $225,000. Now, according to Trump's tax plan, all income that is earned in the first bracket there would be taxed at 12%. All income in the second bracket is taxed at 25%, and all income in the third bracket is taxed at 33%. Now, when it comes to capital gains for the first bracket is taxed at 0. And capital gains for the second bracket is taxed at 15, and on the third bracket is taxed at 20. Now, if you think about this logically, currently the capital gains rate is 15%, and a lot of people do actually complain that, really, really rich people make a lot of their money off of capital gains. So, in a sense, you're actually raising taxes on them a little bit. You can actually appeal to the left in a way by saying you're actually raising taxes on the rich. However, the taxes on regular income is cut by so much that everybody, no matter who they are, gets a tax break. Now, there's other parts that go along with this. And specifically, that is Trump's plan to double the standard deduction. Now, currently, the standard deduction is $6,300 for individuals and $12,600 for joint returns. That would be increased to $12,600 for individuals and $24,000 for joint returns. Now, even though you're doubling the standard deduction, he also has a plan to eliminate all itemized deductions except for mortgage interest, retirement savings, and charitable contributions. Now, for most, the majority of regular, average, everyday Americans, those are the 3 most common things that people itemize anyways. So even though you're getting rid of all the other itemized deductions, the main ones stay there. And you're doubling the standard deduction, so even though people might be using a certain itemized deduction, they might not be able to use that anymore. But the doubling of the standard deduction, for most people, is going to more than cover it. And even if it doesn't cover it, the tax rate is so low that everyone's getting a tax cut anyways. Now, a few of the things that it also eliminates is, first off, the estate tax, which is commonly nicknamed the death tax. As it stands right now, let's say you had like a farmer or something, and
I could go into my personal story with the estate tax, actually.
Yeah, go ahead and tell your story right now.
Yeah, my uncle and aunt were farmers. My aunt died in 2013 of cancer, but prior to dying, she had to divorce her husband just so that she could sign over the entire estate, their farm and all their assets in their house, to my uncle, just so he wouldn't have to pay the estate tax on what he received, because he wouldn't have been able to afford the estate tax on that. So it really is crazy that, like, someone that's dying of cancer is required to divorce their husband of like 20 years just so they can avoid this tax.
Yeah, and what's unfortunate is that's more common than most people think when stuff like that happens. So, as part of Trump's plan is to eliminate the estate tax. Now, if anything like stocks or land or anything that falls under the estate tax normally, when a person dies and that's transferred over via a will or any other legal obligation that transfers it or that results in a transfer of ownership, the only tax that would be paid is on the capital gains of that property, and even then, it's only paid on if that property is sold. So let's say, like we said, you have land and it's transferred through the family. As long as it stays in the family name, no taxes will be paid. And the only taxes will be paid are regular capital gains taxes upon the sale of that property or stocks or whatever. So that pretty much gets rid of the estate tax altogether. Republicans have been trying to get rid of that thing for a very long time, at least a decade, probably even a decade more. It's very unpopular. A lot of people don't like it. So it's good that that's one of the things that's on the chopping block right now. Another thing that it eliminates is the alternative minimum tax. Now, the alternative minimum tax, for those of you who don't know what it is, a lot of people don't know what it is. Essentially what you're doing is, let's say you have some people that itemize a bunch of deductions. And those itemized deductions end up being more than the standard deduction. So they take their itemized. Now, what happens is you have a lot of people that will itemize a bunch of things to the point where they're hardly paying any taxes at all. What they have to do is they have to fill out the alternative minimum tax as well. And by filling that out, what it does is it doesn't include a lot of things that you're allowed to itemize. And what essentially happens is almost always the amount of taxes that you'd have to pay using the alternative minimum tax is higher than what you would pay normally. And the rules go is that if the alternative minimum tax payment is higher, you have to pay that instead of the normal amount. So what the alternative minimum tax does is it makes it so that rich people have to pay more taxes than normal. That's essentially what that is. It's extremely confusing. So it's a good thing that that's also going to go away if, this plan gets passed by Congress. Another thing it does is it eliminates the Obamacare tax on investment income. I've never paid that tax. I don't think my family's ever paid that tax either. But I think that's one of those ones that actually is, it's more for higher income folks. If I'm wrong about that, I will eat my words. But any tax cut related to getting rid of Obamacare taxes, that's good in my book. I'm sure it's the same as your book as well. And so,
yeah.
Now, the biggest thing that's part of Trump's tax plan is dropping the corporate income tax rate to 15%. Now, we currently have a corporate tax rate of 35%. It's the highest in the world. It's crazy. But his plan is to lower that down to 15%. So companies will now have a lot more money that they can then use to reinvest in themselves, pay their people more, most likely reinvest in themselves, and that helps grow their business, helps grow the economy. It's very good overall.
And that helps small businesses in addition to larger corporations.
Right, because small businesses, a lot of them, they barely make any profit at all. Maybe 1-2%, if that high, is their profit margin. And even for large corporations, it's not that much. Enzo, do you know how much the profit margin is that Walmart gets?
No, I don't.
3%. Yeah, Walmart's... Now, obviously, they have stores all over the country, all over the world, and they sell tons and tons and tons and tons of merchandise. So you have hundreds of millions of dollars in profit. But if you look at percentage of all their actual sales, it's only 3%. It's very, very minuscule. And for small businesses, they'd be lucky if it's 3%, maybe 1 or 2% at the most. especially. So for small businesses especially, this helps them out a lot. Now, one of the other things it does is it places a one-time tax on money held overseas in order to bring that money home. A lot of people complain that corporations like to hoard money overseas in tax havens, and that's money that they're not able to reinvest in themselves here at home. That's money that they're not able to use to pay their people. And a lot of people want that money to bring home. But as current law states, to bring that money home, very high taxes on that as well. Now, obviously, we want that money to be here in America. We want that money to be reinvested. We want that money to help grow the economy. And you're not able to do that if it's sitting in some tax haven in like Switzerland or something. So Trump's plan was to place a one-time tax on that money. Now, the White House did not specify an exact amount of what that one-time tax would be, but during the campaign, Trump said he wanted that to be a 10% amount, which is a lot lower than what the current rate is, I'll tell you that. So I feel like businesses, if they had that opportunity, knowing that this is all they're going to get, they'd probably go for it. Because, I mean, if you have to pay 35 or whatever percent tax to bring that money home right now, as opposed to 10%, you want to pay the 10%, get that money home. Because they don't want to keep their money overseas either. They want it to reinvest in themselves as well. So that's something that we'll have to, A, make sure is specified that it is 10%, and B, make sure it is low. So that'll be something that we don't have the exact numbers on right now, but we'll go further. And the very last thing that the White House plan released is to eliminate tax breaks and loopholes for special interests. Now, this is where I feel like you're going to have a lot of support on the left as well as the right, because a lot of people on the left complain that there's a lot of loopholes in the tax code that allow, like the 1% in order to get away with stuff, as well as having tax breaks. A lot of those are just going to be gone. You won't have tax breaks for special interests. You won't have loopholes for special interests. So by closing those loopholes, what you do is you simplify the tax code. And a lot of this is simplifying the tax code. The tax code we have right now is 75,000 pages long. It's enormous. It's insane. If you're not a tax expert, you're going to get confused and you're going to miss things.
And luckily you're an accountant, so you can go through this better than most people.
Yeah, the semester of the election, I guess that would be this fall semester of 2016, I was taking an income tax class as part of my major. And when Trump won, the rest of that week, every single day, it was a Tuesday, Thursday class, so it was really just that Thursday. But that Thursday we had we spent the entire day going over Trump's tax plan and how it would change the current rate, and all these things. Now, one of the things that my professor pointed out, and I think is very true, is a lot of these things are not what's going to end up be the final product. It's not going to end up being passed exactly how it is by Congress. There's a lot of obstruction that Congress is going to put up. There's a lot of people that are going to, even on the Republican side, are going to try to add their own things into this, which I don't think is such a good idea unless it's even better than this. You're going to have a lot of grandstanding on the left that they're just going to try to, vote down any measure they possibly can. I feel like it's going to be a lot easier to pass in the House because the House has a lot more, we have a bigger lead in the House than we do in the Senate. And, at this point, I've said this on the show before. In the House, things only require a majority vote. Republicans have a majority in Congress. It doesn't matter what the Democrats think. Just get the party on board and get the stuff passed. In the Senate, you have to worry about a couple of those Republicans like John McCain or Lindsey Graham or those guys who are working to sabotage Trump's plan in any way that they possibly can. So at least in the Senate, you need to have a little bit more crossover from the Dems, or at least more of a broad appeal to where those people aren't going to sabotage your efforts. That's why I made the point of, closing those tax loopholes and closing those tax breaks. You can have a lot more, you can appeal to the left more than you would need to in the House. And what passes the House is exactly what has to pass the Senate. That's how it works. So in a sense, you also have to appeal to the left in the House as well. So that's pretty much just a quick rundown of what the White House's plan was. and there's some more stuff that we're going to go over to in Enzo. However, there is one poll that I want to talk about before we do that, and that's a poll that was done, released by CNBC a while back. I think this was released back in June, I believe, when you were talking about how it helps small businesses. The poll was on small business owners on whether or not they like Trump's plan. 42% said they support Trump's plan and they like it. 33% said it would have no effect on them at all. Only 24% didn't like it. So if you do the math there, 42 minus 24, you get 18. So we're already sitting at a plus 18 support among small business owners. So this is something that is definitely wanted by them. This is something that's definitely needed. Tax reform is long overdue, and I'm glad that we have a president that's at least lowering those taxes rather than someone that would want to raise them higher.
Yeah, and we haven't had major tax reform since Ronald Reagan, so this is long overdue.
And sorry, I was just going to say, and a funny thing about the tax reform that was done under Reagan is my professor was one of the people that they actually called to Washington, D.C., to actually go over the tax plan to see whether or not it would actually work. So he was one of the few people that actually put that together himself. So I guess I could say I know someone who has experience with working in Congress through tax reform.
Yeah. I wanted to bring up a couple points. I didn't want to interrupt you so much while you were telling some very important information. But the number one reason why I support Donald Trump's tax plan is dropping that corporate tax rate. If they only drop that down to 15%, I would be generally satisfied, even though, it would be good to lower taxes on generally everyone. But the thing is, with our current tax rate, we are not a good country to invest in general. China, their corporate tax rate is only 20%. So, that's why a lot of companies decide to go to China as opposed to come here. And the thing is, if we drop that tax rate down to 15%, we are increasing the tax base, because as companies come back and invest in the United States and create more profits, there's going to be more taxes even off that 15%. And, the corporate tax rate is not generally a large portion of the, the revenue from taxes. It's only like 8% or something?
It's very small. It's less than 10%.
So really, it wouldn't have a major effect on how much money we're bringing in, but it would be the most beneficial thing to the economy that we could do, Another thing I just want to talk about quickly is, people talk about how such a tax plan on the left would increase income inequality. That was the big thing that Bernie Sanders railed against. But the thing is, when you talk about income inequality, is that really the thing you need to keep in mind is social mobility. There's some stats on this that I don't think people realize. There's a study out of AEI in terms of how social mobility still stands in the United States. The top 1%, 12% of people in the United States will reach the top 1% for at least one or more years in their lifetime. 39% of people will make it into the top 5%. 10% or 56% of people will make it into the top 10% in their lifetime. And 73% of people will make it into the top 20% in their lifetime. So really, when they rail against income inequality, it's not indicative of how successful people still are doing. Because when they, get the numbers on income inequality, younger people, they don't make as much money as people that are more established, because they're not more established in their career, or even they might be working part-time. So the numbers on things like income inequality are really just not important generally. And, that's a thing that I don't think the left just understands at all. But I don't know. It's important to keep these things in mind when we talk about increasing or reducing taxes, because they always say oh, you're cutting taxes on the rich. You're cutting taxes on the rich, but that's not a generally bad thing. We don't want to disincentivize people from gaining more wealth in their lifetime. I don't see a point in that. And I don't really want to penalize the most productive people in society. I'm not envious of people that are rich. I don't make a lot of money, and I'm not pursuing a career that's going to make a lot of money, but people being rich doesn't hurt me. Uh, yeah,
Yeah,
that's generally just my spiel on income inequality. I don't know if you have a comment on that.
yeah, I do, and it's worth keeping in mind that something like half of all Americans don't even pay income taxes, or don't even pay federal income taxes. And of the taxes that are paid, it's like the top 2 or 3% of Americans pay half of all income taxes that are paid. So they already pay the highest amounts, and yeah, that's just what I wanted to add.
And another thing that I just want to bring up is, the Democrats always talk about, oh, if you have a super high tax rate, that doesn't actually like hurt business at all. They bring up how under FDR, we had a tax rate of 90% on the highest income earners. But the thing is, no one was actually paying that percentage. There are so many deductions to the point that it wasn't more significant of what they're paying now.
That's absolutely correct.
Uh, I think I want to generally talk about now just the potential of getting tax reform done. You kind of touched on that earlier.
Okay.
I know Paul Ryan, the Speaker of the House, does not support Donald Trump's plan, and he wants to come up with his own plan. He generally doesn't believe that Trump's plan would be revenue neutral. But there was recently a study there was a poll out of some economists. Let me pull this up. It was out of Bloomberg. They asked 38 different economists what they see the likelihood of this tax reform being passed. And 29 of them out of the 38 believe that this will be passed. It's generally agreed upon in the United States that tax cuts is a very popular thing. Do you want to mention some stuff on how the stock market's been reacting to tax reform? Because I know that's very indicative of what they believe will be happening.
Oh yeah, absolutely. I mean, if you just look at the stock market in general, since election day, it's up almost 20%, at least the Dow Jones. Other sectors are up even higher. And a lot of that has to do with just overall, in general, economic optimism that's come back to this country ever since the election and since the inauguration. But a lot of it also has to do with people believing that tax cuts will happen. Because if you remember, the stock market, it does not indicate past behavior. It indicates what people think will happen in the future. When it goes up, more optimism. When it goes down, less optimism, or even, what's the negative? Pessimism. So in general, it's gone up. And anytime something bad happens to the Trump administration, you'll notice it tends to go down. A lot of people believe that's because, when bad things are happening to the administration, it makes it harder for them to do things, meaning it would make them harder to pull off something like tax reform. Now, when Trump released his tax plan back in the end of April, the one that I was reading off of earlier, the market did very, very well for the rest of that week. I think it was released on like a Wednesday, if I'm remembering correctly, and that was just specifying. That was the first time the White House had actually released what their idea for tax reform was since the inauguration. And so then that gave businesses and economists and everyone an idea of at least where the stepping stone was going to be. Now, it's interesting that of that poll that you're talking about, the Bloomberg, that 29 of the 38 expected them to actually get tax legislation done. Now, more specifically, though, that's talking about those people that said that, the 29. That's them believing that Congress will get tax reform done by the midterm elections. I think you didn't mention that. And my opinion, though, is that tax reform is something that needs to absolutely be done as soon as humanly possible. I don't know if... well, I should just say this. I think that tax reform is something that's, it's going to be easier to pass than healthcare was. Healthcare is something that does not have bipartisan support. Healthcare is something that even doesn't have very much Republican support when it comes down to individual different parts of it. So it's very, very hard to get healthcare done. And even look at that. We got healthcare done in the House. and it came down to just one vote in the Senate. So we got extremely close with healthcare, but we weren't able to make it. So you can use that optimistically to say, hey, if something as difficult as healthcare came that close, you should at least easily be able to get something done when it comes to tax reform. Now, I don't know if, let's say they actually do get it done sometime in the next 3 months or so. I know it's going to take a little while to get this done. So I'm not saying someone that, it's going to pass, within a couple weeks.
It could take a year or two.
It easily could take a year. But I think what would be definitely important is, and this is something that I don't personally think is going to happen, but it's more something that I would like to happen, is if you're going to overhaul the tax code, don't do it all at once. Do little things here at a time. If you kind of understand what I mean by that. So, first, the first thing you want to do is try to get that corporate income tax rate down. If you can't do that first go after cutting some of the loopholes, or first go after, closing those brackets from 7 down to 3. And the thing is, even if it actually gets passed this year, I sincerely doubt that it will take effect next year. Because the taxes that people pay in April of 2017, in April 2018, is going to be on the stuff they earned during 2017. So the current things that happen in 2017 needs to stay with the current tax code. Now, that means people are going to be paying higher rates. But if they can get tax reform done by the midterms, especially before the midterms, that definitely favors Republicans when it comes to the midterms. And it also favors people in 2019 when they have to actually pay those income taxes that they earned for stuff that happened during 2018. So that's definitely something that needs to be done. I think it can be done. I think that, guys like Paul Ryan, they don't like Trump's plan. They don't like Trump at all. I just say, screw those people. Do it as best you can. If Paul Ryan wants to change something, we elected Donald Trump to be a negotiator. Figure something out with Congress. I feel like him, just as being a businessman, will have a lot better idea of how to negotiate tax reform than healthcare. But that's just my personal opinion. What do you think about that, Enzo?
We are definitely in a do or die moment in the Trump administration because we did not have a legislative success with the healthcare bill, and we were working on that 4 months. That was something that the Republicans were running on since, 2010. They sunk billions of dollars into campaigns to do this, and they couldn't do it. But generally, amongst the Republican Party, tax reform is more receptive than what they're doing with health care. Now, I don't think that they're going to pass something like Donald Trump's tax reform plan. They're going to change this around. But, as you said, Donald Trump's a negotiator, and he's going to sign most things that's going to go to his desk from the Republican Party. It's just a matter of if they can do that. And, we did the preview of the 2018 midterms last time we did a midweek mini podcast. And I really do fear that if they cannot get this stuff done before the midterms, this could really hurt us and our chances from retaining a lot of seats. It is a very precarious situation that we do find ourselves. Because if they don't have anything that they can show for what they've done, why do people really want to support them to continue their job in Congress? When we did that episode, the magic number for the House was 24. If we lose 24 seats in the House, we lose our majority in the House. So we cannot afford to not get tax reform done at the moment. It is the most important thing that Donald Trump can do right now to have success and continue to get his approval rating higher than where he is. I know he's already planned to campaign to pitch this reform across the Midwest. So I'm really looking forward to how receptive people become to this tax reform plan in the coming months.
Yeah, and while you're saying that, there was one thing that I actually forgot to mention earlier that was one of the things that Trump mentioned during the campaign, but was actually not part of the White House's plan. So we currently don't know if this was actually going to happen, but it's something that he did mention, and that was adding a deduction to the tax code for people who have children in like childcare, because what he mentioned was he said that people who have small children should be able to deduct the average cost of childcare from their taxes, even if they don't actually pay it. So that's a huge tax cut, especially for younger families who tend to have younger kids. Which, if younger people have more money, any more money for younger people is going to go a long way, especially when you consider that younger families tend to not have as much money as older families to begin with. That's just something that I completely forgot to mention, but I wanted to bring it in.
And it would make, people be more productive. They could spend more hours away from home if they know that their children are being watched after.
Right. So in general, yeah. One of the things that a lot of people do forget about the tax code is, it's 75,000 pages long, but taxation itself does not necessarily exist just to earn revenue. A lot of what the tax code does is it tries to guide people's behavior. Now, what that means is, I'm just going to use the example of movies. Now, when people want to film movies in different states, if you notice, especially recently, a lot of movies tend to be filmed in the state of Georgia. Now, what Georgia did is, Georgia offered a tax break for companies to film there. Now, what that essentially meant is that, you can film in California or New York or something and pay this heavy amount of taxes. Or you can, pay it in Georgia a much smaller rate and get your stuff filmed. That's part of the reason why, if you remember the show Breaking Bad that came out in 2008, that was originally supposed to take place in Los Angeles. But when the state of New Mexico got wind of them having this idea to film the show, they said, hey, come to New Mexico and film, we'll give you huge tax breaks for it. So they said, you know what, sure. And it did. And they ended up and they filmed every single season there. Almost everything was on location as well. And but that's just kind of the idea that I wanted to say, is that taxation itself, a lot of stuff in the tax code tries to guide people's behavior. If you want people to do something, you lower a tax in that area. Or if you don't want people to do something, you raise a tax in a different area. So the point that I'm trying to get to is, when it comes to that, the tax cut, or at least letting people deduct the average cost of childcare, in a way, you're almost encouraging people to have children. In a way, because if you can, not have to worry about a lot of the costs associated with raising a child, saying, hey, I can put my kids through childcare a lot cheaper than before. We'll have more money in the pocket. If you're someone who's, if one of the things that you're worried about when you're having a child is the cost of raising that child, I'm not saying this is going to ultimately make the decision for them, but I'm just saying is that's something that can be put in the pros list rather than being put in the cons list. So. Yeah.
And, I would generally consider myself a very pro-family first individual when it comes to policy. I am not one of these ideologically pure libertarian types. If there are things that you can do to benefit families, I generally support it. I think, as we mentioned, child care tax deductions would be generally good for this country. In the same sense, I also support maternity leave for people. I just think that if we do our best to support families and allow people to be able to invest in their own families, especially if we can cut taxes for the middle class, we will unleash a potential in our own country that I just don't think people realize.
Yeah, I mean, even if you just look at GDP growth alone, a lot of the current GDP growth that's happening isn't necessarily because of any of the actual legislation that's been passed. A lot of it has to do with the fact that Trump's been cutting a lot of regulations via executive order. I know we've talked on the show that they're cutting regulations as opposed to adding new ones at, I think it was a rate of 16-1. So you're drastically cutting regulations. That alone is making businesses be able to operate a lot easier. be able to do a lot more. And anytime you cut a regulation, there's costs associated with adding regulations, both on the business side and the government side. So by cutting those regulations, the businesses have more money and the government has more money as well. So it really helps everyone in terms of the business sector.
Yeah, when Trump came into office, he signed the executive order for every new regulation you need to cut to. Under Obama, regulations went through the roof, but we've been able to outpace that one addition to two cuts. It currently is, for every new regulation, we have 17 regulations cut. So that's really what's making the economy so productive right now. I believe this last quarter we had like 2% GDP growth. I know the big number that people try to aim for is 3% GDP growth, but we are on the path to do that.
Yeah, and actually that's something that we were going to talk about this on Sunday, but I might as well mention it right now. The Federal Reserve Bank of Atlanta actually projected their current GDP growth for the third quarter to be 3.7%. That would be the highest. That would be the highest GDP growth quarter in years. And even then, if that's that much higher, coupled with the first and second quarter GDP numbers, which normally do get revised higher towards the end of the year, I think it's very easy that this year alone we could see 3% GDP growth. And if not this year, then next year, especially if you're able to get tax reform done relatively quickly.
Yeah. Just some things I also wanted to mention in terms of tax reform that have been talked about but I don't think are as likely to be done. I wanted to talk about the border adjustment tax which has been proposed. This would be as high as 35% for corporations to sell back into the United States if they move outside the United States. So what this would do is it would make companies very hesitant to move abroad. You can already actually see that they have been doing it as much because they believe that there is the potential for this to be done. Now, I know a lot of people, when this was brought up in the news months and months ago, they were very afraid that, it's going to increase the cost of avocados and whatnot and different produce coming in. And in the short term, it would do such a thing. The thing that you need to realize about tariffs, and I'm one of the rare, I guess, people on the right that do support tariffs, is it incentivizes once again for them to just produce these things in the United States. The difference between actually productivity and like say manufacturing to places like China is only around 10%, and we have, better workers generally than what they have abroad, and we generally make better profits. So if you do put a small tariff, your avocados are going to start coming from the United States because they would be cheaper than what's coming in from Mexico. So that number, the prices on things would eventually go down as you're creating these things in the United States, and it would benefit people in the United States. Another thing projections, as according to PolitiFact, which is pretty left-wing generally, would say that if you were to pass a border adjustment tax, we could bring in about $5 billion, which was suggested that this could go for the wall, which is, only around $20 billion to create the entire thing. Another thing in terms of how we could fund the wall, which I don't know if we could ever pass this, was just taxing remittance. The projection, if we were to do such a thing, would only be like a 2 or 3% tax on remittance. But there's so much money leaving the United States to places like Mexico, Central America, South America. If you're able to put a 2% tax on remittance, it's projected that we'd receive about $24 billion just in the first year. So you could pay for the wall immediately right there, or you could just put it into the federal budget or whatever you want to do. These are things I generally support, but there is a lot of hesitancy to be, because I know it has been talked about, and I don't think people understand how these things could actually work. Do you have any comment on that, Bob?
I was going to say you kind of broke up there at the end, but I can hear you now. So.
Oh, okay. Yeah.
If you could repeat your last statement.
Oh, yeah. I don't think a lot of people understand how taxing remittance or a border adjustment tax would work. But, the things that I generally support, even if the GOP doesn't, and they continue to stick to this absolutist free trade ideology.
Yeah, and that's kind of another, that kind of goes back to what I was saying just a few minutes ago when I was talking about I think you should pass this thing in like small chunks rather than all together. Because let's say you do have something like a border adjustment tax as part of this tax reform plan. If there are some people who, there are some people who wouldn't agree with it, and they might vote against it solely for that purpose, even though they tend to like everything else. And that can completely derail your entire plan depending on who it is and how many votes you have. But if you pass individual legislation in small chunks here and there to reform the tax code, you can get more support for individual parts rather than the entire thing as a whole all at once if there's stuff in there that some people don't like. And so, yes, that will make it'll take longer to get done. But as I was also saying earlier, if you can do the right things first, then you shouldn't really have too much of a problem. Get the big stuff done first and let the little stuff come slightly after it. So that's pretty much what I wanted to say in regards to getting it passed.
Yeah. And it often comes down to those very small things that hold up these bills from being passed. You look at the healthcare bill; it fell very close. I mean, it was only 3 Republicans that went against the bill. It was Lisa Murkowski of Alaska, Susan Collins of Maine, and John McCain of Arizona. And the reason why they voted against that was because they wanted to cut funding from Planned Parenthood. So it can come down to just the very small things that you put into these bills that's going to fail it for you. So these are things that it is better to implement in small chunks over time than come up with some grandiose plan.
And not only that, I know a lot of people, especially from the more libertarian side, they don't like the fact that there's a lot of pork in bills, and there's a lot of hidden stuff within your bills. If you pass smaller legislation that does little things like we were just saying, you help keep out unnecessary things that get added into that, and a lot that's stuff that no one wants to see in there. You don't want anything to be added into your bill that has nothing to do with your bill. So by keeping it smaller and keeping it more precise, not only does it make it more likely to pass, it also keeps the possibility of hidden stuff inside it from not actually being there.
Yeah, crony capitalism.
Right.
I don't have too much else to say on tax reform. Is there any other points you want to bring up before we close up the show?
Yeah, I just wanted to say that, like we said, Congress is currently in their August recess right now, so they'll be back in September. And this is the thing that's kind of on everyone's mind, at least in terms of, politically in D.C. This is what they want to get done. This is what Trump's going to start focusing on more now, is trying to get tax reform done. And so as I said, I have more optimism that this will pass, at least in comparison to healthcare. And I'm just very interested to see where it actually goes and how long it takes and what actually gets done.
Yeah, and we're going to see talks on this tax reform coming very soon, once they come back in September.
Yeah, and we'll be making sure to keep all that stuff updated with anytime there's any major improvements, minor improvements even, just to make sure that we know what's going on as well as everyone else.
Yeah, we'll definitely bring up any developments on how that is going in the Sunday shows, after this episode.
But yeah, I think that's pretty much everything I wanted to cover. I'm not sure how much longer this current podcast will go. I figured that this one would be a shorter one. We've only been going for about 44 minutes.
Yeah, I don't have anything else to say. I think we just close it up for this episode.
All right.
Just to say before we go, we still have the Sunday show coming up, and I don't know. So far, it's not been a busy news week, but maybe that's going to change between now and then.
Well, that seems like the that's what happens occasionally. Is the first few days of the week nothing will happen, and then by the time the weekend hits, it's boom, 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 boom,
blows up.
But yeah, you're right. This seems like it's been a fairly slow news week overall.
Yeah. But with that said, I just want to say thank you for listening once again to another episode of Trump Republic Radio, and have a good day.
All right, goodbye, everyone.
Goodbye.